Welcome back. You're still with us on Markets Today. Let's get to the rest of the headlines that we're tracking for you. Well, on to the fourth headline today. SBI Card Rally 3% after the company's August performance, which was a strong show barring a dip in the credit card spends. Abhishek Kothari is here with the details.
For the month of August, RBI's credit card data do suggest that SBI Card's performance is better than the industry average. So total cards have grown by 2% on a month-on-month basis, while, for the sector, we have seen a decline of 2.8% month-on-month. Total spends have increased by 1.24% month-on-month, while for the industry as a whole, it has declined by 3% month-on-month. However, average spends have declined by 0.8% month-on-month, which compares to a decline of close to 0.2% for the industry as a whole. So in terms of card issuance, they have gained market share for the first time in last 3 months. And in terms of, market share in spends, they have seen a first time market increase in last 5 months. In spends, their market share is now at 17.43%. This compared to 16.7% that they had in the previous month. So overall, a good data coming in for SBI cards, and the festive season ahead is giving the stock, a cheer in trade today.
Okay, all right, Abhishek. Thanks very much for that. Well, on to the fifth headline today then. Nazara Technologies fell close to 3% after the Tamil Nadu government approved an ordinance to ban online gambling in the state. What does this mean for the company? Vaishnav Bala is here with the details.
Well, the Tamil Nadu cabinet has approved the ordinance to ban online gambling. Now, the reason behind doing this is that the Tamil Nadu government says that teenagers and adults were losing their entire earnings and savings in these online betting games. Now, for example, though Rummy might be a game of skill, the game using stakes will become a gambling. Nazara Technologies and many other industries at present are looking at increasing their presence in the online gaming space, which at present is at a very nascent stage in India. We also know that India's online gaming industry has been under the scanner since quite some time and undergoes frequent changes in regulations, in taxations, and likewise the GST. Now, many of these bans were challenged by skill gaming startups and industry associations in their respective state courts, which overturned these suspensions. The Supreme Court had also upheld the fantasy sports as a game of skill in July 2021, which is last year. States like Telangana, Andhra Pradesh, Kerala, Karnataka have sought to prohibit the game of skills.
Okay, all right, Vaishnav. Thanks very much for that. Let's move on then. Mahindra Logistics gained over 0.5%. This is after the company bought Ribigo's B2B express business for around 225 crores. Manglam Malu is here with the details. Manglam.
They've gone ahead and made an acquisition. Ribigo's B2B business is what they've bought for about 225 crores. Remember, Ribigo is the company that pioneered the relay logistics service. They had two arms, that was full truckload logistics as well as B2B, and in that Mahindra has gone ahead and bought the B2B vertical. The B2B business in FY22 did revenues of around 371 crores. Of course, much higher than what we saw in FY21, but lower than what we saw in FY20. FY20 was an exceptional year for online commerce as well because of the pandemic. But importantly, Mahindra Logistics' own revenues in last year were over 4,000 crores, and in the first quarter itself was around 1,200 odd crores. So this incrementally adds about no more than 8 to 9% to their overall revenue. The bigger trigger, however, here will be the kind of leveraging that these guys can do with Ribigo's network of 250 plus processing centers, 1,000,015 square feet of land, or the warehousing area that Ribigo has. So even if they go ahead and do about 6 to 7% margins on this 371 crore revenue that Ribigo has done, it would be accretive for their return on cash, because it would mean about 10% on the 225 crores that they are deploying. The question, however, is how much can they scale up this business with their existing ecosystem.
Okay, all right, Manglam. Thanks very much for that. Staying with a couple of more stocks in focus, Route Mobile gained 2%. This is after the company has upped its guidance and told CNBC-TV18 that they were confident of 50% revenue growth in FY23. Reema Tendulkar is here with the details.
So the biggest takeaway from the Route Mobile interview today is that the company has upped its full-year revenue guidance. The company said they're confident of a 50% revenue growth, but they're likely to do a 60% revenue growth. This is better than what they had earlier guided, which was about a 40 to 50% top-line growth. Secondly, the management also said that this quarter is likely to see record revenue. That's how strong things have been, and H2 is typically stronger for the company, given the festive season in demand, and markets like LATAM typically do well in the December quarter. FY23 volumes will at least be 100 billion transactions. They will do tuck-in acquisitions, no big ones, which will boost their revenues, but tuck-in acquisitions over the next 12 to 18 months. We also quizzed them about their UK exposure and whether the pound appreciation negatively impacts Route Mobile. So here the company clarified a negligible percentage of their revenues gets booked in pound, which means the recent pound crash does not negatively impact the company. In fact, their balance sheet will do better because they have some capital commitments in UK, which when translated into the rupee will actually, provide a boost to the company's balance sheet.
Okay, all right, Reema, thanks very much for that. So that is on Route Mobile, but there was a deal which was announced post-markets, which was Torrent Pharma, which is set to buy a dermatology company, Curated Healthcare, for a sum of around 2,000 crores. Remember, it is a domestic-focused company. They will be coming with a cash consideration of around 115 crores on their books. So the enterprise value of this entire acquisition would be around 1,885 crores. Well, just to put it into perspective, this particular company is very strong in the cosmetic dermatology space. They have 50+ brands in India, and they get around 75% of their sales from their top 10 brands. Now, this would make Torrent enter into becoming one of the top 10 players in the dermatology segment in India. Key brands include the likes of Teddy Bar, which is in the baby space, again Spoo, which is a baby shampoo, as well as Before Nappy, which is also a baby cream. So there's a lot of focus within that segment, and those are a couple of key brands of the company. Separately, just want to point out that the company Torrent Pharma will be taking on around 600 market reps as well as 900 stockists, which will come with the deal. FY22 revenue was 224 crores. However, they have shown growth of around 25% in August, or up to August already, and they expected to cross around 275 crores in terms of sales in FY23. So overall, they've paid around 7 times revenue in terms of this particular deal, a little bit on the more expensive side according to analysts, but nonetheless, it does bring on a lot of strong brands into Torrent's portfolio. Well, with that, it's a wrap on this edition of Markets Today. Thank you very much for watching.